Welcome, welcome, welcome. We are live. It is Monday. Earnings have been madness. We're going to get into that market mastery. We're going to go through the SPY, give you your options trades, talk a little Palantir earnings, talk a little Tesla, and then look at the charts that you want to see. We also have some very big news in which you will be able to experience and enjoy both of these handsome gentlemen before you live and in person in July and get really deep access to that secret sauce that you need to make some money. So I will get us started here. As always, it is a pleasure to be here. Take what you can and leave the rest. Thank you to anyone that has been following so far, liked, retweeted, everything. We appreciate it. Let's get into the SPY, man. It is an interesting day out there in the world. We absolutely nailed it. For those of you that have been following us every week, we've been together Mondays and Fridays. On Friday, we did give them that sauce. If you recall, my friend, we talked about those 513 calls, and we opened a little stronger than I would say I would have liked for entry, but still below 513, which means we were out of the money. Those calls, let's take a little peek at what they ended up doing. I want to say it was a single day. Yep, there was over $7. So 33% return in one day on one trade that was given to you live on Friday. You're welcome. And it was fun, man. I think that really right now in this market, getting trades like that is more than you could ever ask for. How do you think the price action played out today, my friend?
I liked it a lot. The only devil's advocate I'd say is I didn't like seeing the light volume. It wasn't the volume I wanted to see for follow through. Again, like I do think we healed a lot of the destruction that we saw in the past couple of weeks, where that Friday macro data, that the job number deceleration is like significant for a lot of the bear thesis, where a lot of people thought, oh, job numbers gonna be stronger, like higher for longer. There's maybe gonna be one. That's a game changer in my opinion. So I do think that a lot of the bears are kind of retracing their original thesis, and because of that, they might be the bears in the market right now aren't perma bears. There's bears in the current climate of what the market's providing them the info. So because the narrative after Friday's macro data is that there might be actually some rate cuts now, they're going to re-infuse their the market with their cash that they have in silence, because we're in the earlier than later cycle of the bull market. Right now, all the bears are just hoping for a slight pullback. Once we broke the 21-day EMA, we broke the 50-day EMA. Everyone thought that there's going to be a test of the 200-day, which absolutely could be the case. But we V-shaped recovery, right? The market's not ready for a significant pullback yet. And sometimes you could believe something, but the price is obviously saying something different, and you never want to fight the price action. So right now, I do think all the big dogs reported their earnings. It was good enough. We're seeing some macro data front of rate cuts actually might happen. 2 of them might happen this year. And geopolitical noise still there, but it's not escalating.
No, so it's simmering. It's weird. I thought that, you look back a few weeks at the whole Israel conflict, like it felt very doom gloom, but be way beyond. This is like a in the moment 24-hour cycle. To me, I'm not gonna lie, I was a little concerned, like, holy shit, this might be a rough 100%. Couple months going into summer. Yet here we are.
I know that's the thing. That's why you always have to have a long-term mentality, because if you were a short-term investor, you probably sold out the bottom of that correction. You missed out on the V-shaped recovery because nobody expected that bounce that we just had in the past week of like, wow. Well, actually, I shouldn't say nobody, because Austin and I did call it out a week ago and also 2 weeks ago. But a lot of people didn't, and a lot of people missed out on this jump and might have that tilted feeling and FOMO feeling. But again, long-term investment cap on, and if you put a short-term trader on, you could potentially pivot it and still benefit from the bounce and still hold your positions.
Well, let's take a quick look. You mentioned something interesting that was worth the mention, right? Talked about that V-shaped recovery and missing out on these historic runs. So you got 08, which showed us, okay, instant V shape, and one of the best decades that any market's ever going to see. Unprecedented growth, but again, because capital was so cheap, real estate was so cheap, and then that real estate value got locked in and it's sitting, right? Which then completely repositioned the market, in my opinion, to looking at in 2020, my thesis going into, and we didn't know each other at this point, but I do feel like you probably would have very much so agreed, and I'm interested to hear your thoughts, but in this transition breaking up above 3,600, right? In February of 2021, I released my ideology and way of thinking that tech is the new value. As weird as that is, I just kept hitting that. Tech is the new value. Tech is the new value. It is. Even though it's counter to what the mind could, I can't understand. It doesn't make any sense to me, and I'm saying it. But you could just see it in the readout of the market. And again, V-shaped recovery. If you missed it, you missed it. We dumped. October 2022 was a rough year. Boom, V-shaped recovery. Here we are again. What drove the growth? Again, is tech the new value? That's the question I asked right here. February, end of 2020, beginning of 2021, is tech the new value? And I think the market answered that question with a resounding yes.
I mean, dude, I wish we knew each other back then because we would just pumped each other up, but I couldn't agree more. Like, I got the Palantir. I started CrowdStrike in the 90s back then. Palantir in the 8s. Like, there's some insane value of tech stocks that are growth tech stocks that are going to disrupt a massive industry, and not just a massive industry, secular growth industries. And because of that, back then, I was like, oh my God, this is getting straight dumb now. Yes, I get they're not gap profitable, or their SBC is super high and they're getting punished for it in a dry capital market. But at a certain extent, like, come on, like, these are revolutionary products, tech products that would be disruptors for years and maybe decades to come. So yeah, back then for sure, there were some insane fire sales that resulted into some actual value plays. Like CrowdStrike in 90 was a clear value play. Come on, like, they had a fundamental profile of 30% free cash flow growth and growing top line an insane amount. And they were just like being punished with the just a general growth bucket of the non-profitable names. And it became such a value play. And you could go, the list goes on and on. Like, the metas got punished like a stupid amounts. Their metas will always be around. Like, they're always going to have a massive ownership of data for multiple generations. But yeah, another one, Palantir, is like, come on, like, pure AI play. They were pounding their chests on AI before AI was even a thing. Like, if you guys know Karp, like, he's an AI guru, and he was always the first one who like saw this vision of it. And even back then in 2021, large language models were always here, like, for over a decade. They didn't gain popularity until consumers started getting the ChatGPT moment of it. We're like, wow. And that's when the scalability happened much quicker than a lot of people anticipated. But LLMs have always been here. AI has been here for over a decade. Alex Karp and Palantir was a leader of that back in the day. And once he went public and like their fundamental profile was really strong, mainly a government player back then, not as much as the government commercial side we're seeing right now, but government player back then. And if the US government trusts you to protect the defense using AI, what's a bigger stamp of approval than that? And back then, even Palantir was getting punished at the 8s, even though the US government defense, the DOD, was giving a stamp of approval, like, this AI is real and we needed to defend our country. Yet people still sold it off. That's an example of a value play for growth tech.
It is. And I think that looking at companies like Palantir, so this is one that I know you've covered, I know I've covered in depth. You know, IPO, it went wild. I think that that's always a difficult time, especially given the market conditions in 2021, very favorable, right? And then 2022 happened, and anything positioned for like long-term future sustainable growth in a new market was doomed to fail at that time. But again, as Shay mentioned, which is very important to understand the fundamental nature of the value that these businesses have created for themselves in a world where it's the future and no one else is doing it to the scale, degree, and capabilities that they are. This at $7 is like, punch yourself in the face if you're not buying it, because you should be. And I will say this, I was a huge buyer below $8. The majority of my position is below $8. The other half of it's about $12 cost basis, but again, hedged with options. Dude, my I want to say, what are they at now? Let me take a quick look. I looked at them today and I posted. Like, these are the companies, for those of you that are options traders and you love getting into it and you really want to make some significant money trading long-term options on these, I will share this with you, my friends. Small position, we are currently up 886%. Why? Because this was a no-brainer trade. So if you look back to the chart here, March of 2023, I think it was. So we were buying, and I'm going to flip right back to the chart. We were buying in March of 2023, which is right here. This push up off of 780s was the golden ticket. We had this little bump here. Volume started flowing in. When you see volume flow into names like this, they have the institutional backing and government fund. I mean, come on. Like, certain companies in this day and age, they're not part of the government, but it's hard to argue that they aren't supported by the government's infrastructure. And I think companies like this are case in point. I mean, your thoughts on that?
I mean, you nailed it. I mean, I actually can't think of another, maybe one or two others of small mid cap that can truly scale and become a mega cap. Palantir qualifies for that. They legit could be the operating system for all enterprises. They can. Kathy Woods made this comment a couple weeks ago. People call her crazy, but like I do call her a little crazy for saying that, like targeting Microsoft. But I do think Palantir could be one of the competition for Microsoft in the enterprise space, not the total enterprise space, but like a specific niche. They could be eating Microsoft's lunch in that. That's what Kathy Wood said. My interpretation is like, again, if we continue seeing the commercial customer growth quarter after quarter accelerating, like we've been seeing, even today's print, we saw that. There's the scalability is unheard of. Like, this is a type of product that saves you billions of dollars as an enterprise. And during an environment where inflation's high, costs are rising as well, and you kind of doing workforce reductions in order to maintain your earnings estimates, like they're going to try as many avenues as possible to save money. Palantir's product will do that for you. And there's not just like little players are using them, clients, like major clients, major healthcare providers are using their Foundry product. There's major governments who are just like using them to protect their whole country, billions of citizens. Like, I'm telling you, Palantir, don't get discouraged that it's down 5% after the print today, because it had a massive run up. And there's some other reasons on why they're dipping a little. I just know that my thesis got validated 2 quarters ago when we saw that AIP inflection point in their commercial count. Last quarter, we saw it 70% growth. This quarter, we saw acceleration continue. Like, it's happening. It's going to take time, but this will be a mega cap company. And I will be adding as much. I wish I could add more. My cost basis is below 10. I have 700 shares. They haven't really pulled back of like stupid amount for me to add, because right now I'm coasting. I'm up nearly triple amounts on my original average cost, and it was an overweight position. Right now, I don't want to keep adding because I printed already, and it's already a top 5 position for me, where I think I found the next Palantir, the next CrowdStrike right now. I've been very vocal about it. I think Snowflake at under 180 is an absolute steal for what's going to turn into in the future. So I rather diverge my investments towards that, or even Tesla right now. Like, I still think it's stupid. Like, there's only a handful of companies that are truly revolutionary in the growth tech space that can prove it fundamentally and the product side. Tesla, Snowflake, Palantir, CrowdStrike, they're in that category. So Palantir, I guess everyone and their mothers is waiting for Palantir to break 20 to add an 18 and 19. It's not going to happen. After this recent print, it's probably not going to break 30, but it's not going to break 20. It's going to consolidate because it kind of needs to. Look at the chart that Austin's showing. Like, it ran up a ton, and we're not really seeing the revenue reacceleration that I was hoping for, but we are seeing in the commercial customer count, which is the number one metric. It just hasn't really trickled down to the revenue yet. It will. It's inevitable. No way they're picking up the commercial clients like they are right now. It's not going to result in a revenue reacceleration. It's impossible. It just hasn't happened yet. So until that happens, it's probably going to consolidate. But again, you want that to happen because you don't want a name that's not cyclical. It's not a cyclical business. Just run up a shit ton and it turns into a bubble. Like that's not a healthy long-term bull thesis. Like everyone wants the next Nvidia, but guess what? Nvidia's in a cyclical environment and it's running up a ton, but it's going to kind of fade eventually towards the mean. Nobody knows when that's going to happen. But Palantir isn't the same kind of arena as that because it's not a cyclical business. And one last thing I want to talk about Palantir is their government deals. Nobody can anticipate when that's going to come through at all. And there's been some wonkiness in their government deals in 2024. Who knows if the weakness in first half of this year in government deals will just return to the mean of a really aggressive second half government side of the deal. So theoretically, there could be an overweight in government deals in second half combined with the momentum that the commercial side's seeing. That combination can see an absolute home run of a second half of this year for Palantir. Breaks 30, and then after it breaks 30, watch out because the chart's like that's a blow off top. And something as revolutionary as Palantir, it's hard to put a ceiling on that because it's a once in a generational type of stock. And if it has a blow off top, like good luck getting in front of it. Like a lot of people tried doing that Nvidia a year ago, even Microsoft a year ago. Look where they are now.
I would completely agree, especially seeing these volume inflows. Like if this thing does go, like as long as we're north of $30, as you said, like we're going to $70.
You could say 100. That's the thing. Nobody, it's like unreal the potential of it. It's
that would be number 2. It'd be about 109.
Yeah.
Just using like simple fib retracements to understand margin spread between buyers and sellers tells us based on their volatility bands how far this realistically could go, and I think that's not out of the question. I don't.
And people who say that they got like, is it too late to get into Palantir? We just gave you a scenario where you can triple your money or maybe 5x your money with the fabric trade. Like it's not too late. A lot of people are like wondering, like, oh man, I wish I got into Amazon, I wish I got into Apple, but like it ran up in 2009, 2010, like after recovered, there's a V-shaped recovery, it ran up a ton. Oh my god, it's like literally 5x at least by then since then. So like these names, they're not going to give you the blow off like gap downs and fire sales, like rarely. Like what we saw in 2021, that was a macro thing, and it's really rare to get those macro cycle dips and across the board. It's not going to happen for another couple of years unless we get an insane recession in 2026 or 2025. Like it won't happen. So watch out for have enough dry powder to add for Palantir for any kind of meaningful dips. They're 200 days at $19, so that's why I have my limits in place. As soon as they hit the 200 day, I'm re-upping because right now I have 700 shares. It's an 8% position for me in my portfolio. I want to clean 1,000. I want this to be as much as my Snowflake. I want it to be as much as my CrowdStrike because it belongs in that tier with my growth portfolio. I was like, wow, that's tier 1, elite, fundamentally, product-wise. CEO is like phenomenal. Like that's the tier. Like I want 30% of my portfolio being in those 3 names.
Agreed. I mean, I love it, and I think it's worth mentioning that having that sizable position too, you kind of have an easy road ahead in the covered calls department.
Yeah.
So if you guys look at this chart, I mean, it's pretty straightforward. Like we've faded almost all the gains, right, since inception. And even into this run that started, May of 2023. Again, we were buying this publicly. Go back and look at our post, March 2023. That was the pound the fucking table moment. And even since then, we faded those gains only to recapture those moving averages and continue to push higher. And I would argue in a healthier upward consolidation than what we don't want to see this. I don't, at least.
No,
I don't want to see
this
kind of move up. I want to see this kind of healthy consolidation. So as Shay said, you can buy these opportunities every time you're hitting right there, knowing that you're buying long-term trend to build a very large compounding position. And I think that for companies like this, that's the move. We've highlighted these ranges. So the trade here was above 16, aim for 22. We hit that. And above that, we want to aim for 26. Above 26, it's anybody's game. That's, as we talked about, that's where we test $30 and we really see how far this thing can run. But I couldn't agree more with the analysis that was just laid out with you. This is like single day inflows are just even more impressive. If you look here at the bottom of the screen, I mean, we're pushing, what was it today? It was pushing, this is one that did not suffer from low volume today, which was, what was
also,
it?
I do want to call out the institutional side was completely offside in his name. This is fully from retail side of this move that it's seeing, because the institutional side, they didn't believe in Palantir's product. Which I understand. Like I'm in corporate strategy. I am kind of on that side where Palantir is a black box. I know a good amount about the product, but again, like I've studied it for years. I still don't think I know enough. It's that kind of technology and product. And for the institutional side, that's usually a red flag, doesn't pass the sniff test, or like, I'm too dumb to really dig in and to understand it type of thing. But 2 quarters ago, you can't argue against numbers. And they were offsides completely on the name. They're going to try to accumulate. So don't be surprised if we're saying it's going to consolidate. We don't see that because names will start adding it because they're underexposed in something like a name like this in the AI space. And this is a realm that they want to be exposed to. So don't be surprised if we start seeing a fade. By the way, a fade of 5%. It's up 8% today. It's still higher than it was on Friday. So everyone on FinTwit is like freaking out. It's like down a lot. It's higher than it was on Friday. Come on. Anyway, don't be surprised if you see some volume accumulation happening in the coming weeks in this name, because there's minimal institutional support. Institutions want to add to names like this, and this potentially gives them the opportunity of like, finally, the last 3 quarterly earnings report, they've had gap ups. This one's a slight dip, nothing thesis breaking, just ran up a ton in the print. This is time for me to add, especially have the S&P 500 inclusion, which is inevitable for this name because they qualify for it. And this had another gap profitable quarter. And like I said before, this is the only pure AI name in the whole market, the whole world. Institutions want an exposure in that. So they're going to get it. That's just how the game works. And don't be surprised if we see a fade, but slow trickle towards like that 26, 28 ahead of their earnings in a couple months.
And I think it's worth noting too, everybody's panicking, and then you see this on FinTwit, you see this on Reddit, you see this everywhere with everyone who's ever traded stocks. Actually, this panic should not occur and should not exist. And here's why. If you had the sack to listen carefully. When we talk this much, and I'd say take this stream, right, and put it into a small box. Just go and write down, like, what are the names they talk about the most, right? That's where our excitement is. That's what our interest is. Mm-hmm. I do feel like you could trust that both of us have psychotically researched this because we're putting a large sum of our own money into these names, right? Do you think I'm going to bet my own money on something I'm not as confident as one can be is going to be a winner in the end and pay for my life? When you notice that, don't fear these moments as we come down. These kind of moments, we get this push up and you go, you know what? Nope, I'm not doing it because this is going to die again. And then it pushes up and sells off. Every time you find that dip, $7.50, $8. Look at this range right here. I bought every time we touched down, $7.40, $7.57. The only one I regret not buying it was below $6. I didn't because I didn't have the capital allocated because of another trade. Once I got it out, I was buying. If your cost basis was the same as what we're talking here, $6, $7, 2 to 3 to 4 to 5% drawdown after a couple 100% move is going to be something you're not going to give a shit about.
Which is why Austin and I don't give a shit about it being down 5%. It's like, whatever, all right, man. Cool.
Because I want the 100% that's coming. More on top of compounding gains that already exist. Because keep in mind, when you're up 400 or 500% in a position, those little moves are material. Mm-hmm. Very material. That's where that compound interest really becomes your friend. So I think just like this name we're going to quickly talk about here that we've been talking about for quite a while, when the fear is there and we're talking, hey, everything is shaping up in the right direction. This is a name that everyone's interested in. They have like record retail, I would argue record retail engagement and desire, but here we are talking about this. How many weeks? Was that a week ago? End of April. We're talking, hey, $140. That's a no-brainer. Back the truck up, load up as much as you can, and don't think about it again. If you had listened, if you had done that, if you had at least done the research to have the conviction, or at least the trust to trust someone else's conviction, which I highly suggest, research your own shit. But had you followed and listened, again, Tesla runs to 198 and then fades to 177. Everyone's panicking. Oh, I bought it at 195. I bought 195. You will no longer give a shit because you're in at 140. Who cares? I think that's the main point here. Who cares? We're still trading green. And I mean, this chart is extremely favorable. So, like the here and now, what can we do? What have I done for you lately? I see a lot of strength in trading north of 180. I don't know about you, but I love we're getting the EMA crossover on the daily. Fantastic. We did it that push to 195. Today, I'm not going to lie to you, late May 190 calls looked extremely attractive to me today, and I didn't pull the trigger, and I'm already regretting it after we saw how we finished the day, which I would argue, if we go to the more intraday chart, that we finished the day pretty strong. I liked seeing that inflow there on the buy side coming in. But more importantly, again, to keep this very simple, guys, higher high, higher low. It's that simple. The trend is your friend. Do not violate it. But seeing this kind of sustainable support here, again, we broke this level down for you. We do it every single week. We talked about we want to see a support test and confirmation at 182 and change. If we get it, we have a lot of strength here. And as you can see, when we were trading above this line, every time we touched it or engaged with it, what happened? Boom, boom, upside, which means buyers are rejecting, saying, no, too cheap. We'll take it. Unbelievable.
I mean, it's unreal. And also, like, the news that we got over the weekend is bullish. Like, I know there's a sentiment of like things must be going really bad if they do more layoff reductions. No, come on. Like, I've been in corporate strategy for 8 years. I know exactly what Elon's doing. Tesla is not the same company it was 5 years ago. It's a completely different company. He doesn't have to hire a third party EY or some consulting company to come in, pay them a shit ton of money, appraise their business and what their vision is of like, all right, well, your vision's that, you have this. Those two things don't line up. That's exactly what's happening right now, where he hired a ton. Most of the people he hired is an EV company from 5 years ago. Elon and myself and us have been very vocal. Like, Tesla isn't an EV company anymore. It's an AI software company. They use EV to get into the hardware space for the EV industry, to get as many hands as possible on their cars in order for them to become an AI software play. They're at that point right now. So now they're at that inflection point of like, finally, we can pivot and full on AI software, the FSD technology, autonomous, etc. We need to reorganize our business in order to get the talent necessary to push those go-to-market products faster, because the people we have right now, they're this side of the brain, but we need this side of the brain. And right now, Elon identified that and is just doing a complete wartime CEO mode of just firing a shit ton of people, and so he can anticipate like restructuring his talent that he needs to in order to fulfill his vision. So I think it's bullish. Again, it's all about when you got to Tesla. Did you get to Tesla in the 300s 2 years ago? You might be tilted. Or are you like Austin and I, where we got in the 140s, 150s, and our vision is AI software for Tesla. Everything that Elon's doing is validating what our thesis is in the company. And we're up. I'm up. I got into the 155, so I'm up like 15, 20%. Us is up like 25%. Fine. Like, great. Like, we have some wiggle room until Elon fulfills his vision of what Tesla's going to become. And guess what? Elon does not strike out. Everything he hits is gold. It's not a coincidence.
Even Twitter, I mean, look at the uphill battle that existed there. I mean, come on.
It's just once in a lifetime type of leader, and that's what Elon is. Like, keep like saying he's going to fail. It hasn't happened at all. Like, everything he touches has been gold. Why do you think this is the one instance he's going to fail all of a sudden? His baby Tesla is all of a sudden going to fail. You're delusional. Literally, just look at the stats. He's 10 for 10 on just winning companies. This is going to be another one. Essentially, the way I phrase it, like, Tesla, he's creating a new Tesla company. And look at the previous companies he's started up. Like, they're all insane from this get-go. He's creating a new company within Tesla, but essentially a new company. He's going to do the same thing as Starlink, SpaceX, whatever V2 of Tesla is going to be. It's going to be a star of a company. And great, keep not believing in his vision, because now Austin I can just keep adding below 180 for you,
Yeah.
whatever, as long as we want.
Well, the two incredible opportunities was this sell-off. I mean, so again, buying as early as pre-2020 on Tesla, I get it. I understand the risk. It was a different time, different company, different value proposition. And I would argue that the risk was there then. As this has matured and evolved, all of the very intelligent buyers that were buying through pretty much this inception period have waited for this opportunity for a long time. And you could see it with the inflows here. There's a reason that the volume doubles when we hit this very thick blue line down here. And again, as they said in that was it Wolf of Wall Street, your only regret is that you didn't buy more. I don't know if you could see that $130 trade price. I don't know if it'll show up because I'm not behind it.
It kind of shows up.
So that was buys at 110 and then buys off this recent low at 140. I mean, you guys, you can be sitting pretty on some of these like best in class names. And that's all we want for you, is to be sitting pretty. I mean, you guys, this is a free stream, surprise. Like, we're not just doing it just for fun. I mean, a little bit, but still, the point is that everybody can participate in these kind of names in this market. Now that this stuff is accessible to everyone, the importance of this is not getting just because, look, here's the reality. As an American consumer, for those of you, you get caught up, we all do, by the noise. That's the point. That's why the marketing is inundating. That's why everything is just so complicated, because this type of opportunity has only been accessible to those in the top 0.0000001%. They have reserved that right for themselves in order to keep you ostracized and keep you small and keep you spending money. You're a consumer. You're an idiot. They don't want you to have any sort of upside or growth. They want to ensure that you just continue to funnel money in their machine. Case in point, the evolution of nursing care. Over the last 5 years, they realized, oh my God, these old people are going to give all this money to these dumbass millennials and Gen X and Gen Z. We can't have that. So what did they do? They created a wealth transfer machine so that the people that have worked their whole lives and have all this money, the boomers, can live in the lap of luxury while paying them, to ensure that it doesn't fall on you, and to think that they haven't marketed this to you. It's beyond you. You don't, and I would just say this, I don't want to assume for anyone, but in most American culture, I would say that like your parents aren't moving in for you to take care of them unless there's a financial restriction, right? So those that have the means will go into those nicer forms of care, and they will rob you blind of any and all inheritance you thought you were getting. Surprise, bye-bye. And that's it, and that's all. But names like this don't come around all the time. I do think there's more, I would say, there's the most incredible opportunity that's ever existed now in the advent of technology and seeing its evolution to the point where we have these opportunities that can evolve and emerge in a year and become a best-in-class, unbelievable value proposition. It's not going to be always, but they do happen and they do exist and they are available to you. This is one of them. So for the last time, the buy. What comes from here? I can't make any guarantees or promises. All I can tell you is that they have thought of as much as they possibly could. Clearly, the rest of the market agrees that this is way too cheap by the fact that so many buyers have piled in over the last two opportunities, January of 23 and then April of 24. But I will say the fortunate thing for you is that you're not too late. It's just important that you have the right mindset and the right outlook. Once again, to echo what Shay has been telling you this whole time, I don't give a shit what happens tomorrow. I don't care what happens next month. I care about the fact that this position that I'm holding right now in 10 years will basically cover my mortgage, and I won't have to think about it when I'm 40, 50 years old. I won't have to think of anything because these kind of positions will set me up for success. So we're getting some questions. Is now a good time to buy Tesla? I mean, really, it's up to you. I would say that if your outlook is long-term, like if your time horizon of like, okay, this is money I want to park here in this opportunity right now and the anticipatory effect of a 5-year appreciation. That's my outlook right now with the upside. And I love plays like these because the short-term outlook is there, but more importantly, the 10-year growth story is also there. So you can get the short term, say you're able to afford 10 shares, sell 2 or 3 when they've doubled, put some cash in your pocket, because there will be better growth opportunities that come up short term, but continue to roll those long-term gains. And I'll let Shay weigh in on that as far as the buy right now, but that's my thoughts.
I can tell you this is going to be a lot sooner than most people think, where we're not going to talk about delivery numbers in Tesla anymore. That just shows this, like, what kind of vision that Tesla will be. It's just going to be pure recurring revenue, software name, multiples, metrics they're going to call out. So I don't think it's too late at all right now. I think it's anything under $200 is a steal, in my opinion. If 5 years, if your mentality is like the rest of this decade, you're going to be happy you bought under 200, because there's such a high floor in Tesla's stock of, like, there's only so low it can go. I will say, if you're looking to enter for the first time, wait until the proxy votes, shareholder votes, because that is a headwind in Tesla stock right now, where, like, nobody wants to go balls to the wall on Tesla's stock until we for sure know Elon will be the CEO. And I think there's a 1% chance that he doesn't get voted, but even that 1% chance is scary enough to, like, I'm just gonna wait so I for sure know, like, Elon's the CEO, because that's the reason, like, one of the main reasons I'm investing in the company. So I'm gonna wait until that's validated. It's gonna go up 5 to 6% after that happens. Fine, miss out on the first 5% move, because this is gonna be one of the top 3 most expensive companies in the world in a couple of years, fighting Apple and Microsoft. And right now has a ton of runway for that to happen, because it's only 600 billion, and those names just called out multiple trillion. So that just shows the runway it has. And you can't factor, like, oh, is 180 good compared to 220, because that's so minimal. And want to just call it out, where they're going to be a multi-trillion-dollar company. It's not going to be low 200. It's going to be a $500+ stock, probably pushing 1,000. Stock split, all that noise that Nvidia goes through. That's what Tesla's going to go through inevitably in a couple of years. So, like, don't focus too much on, like, when to buy in. If it's 180 versus 220, focus on, is Elon going to be CEO? He is, yes. Start a position, start DCAing every 2 weeks.
Couldn't have said it better. Here's their earnings projections over the next couple quarters. Again, to look at the chart, I love finding a company that will trade well within its parameters for earnings, which means that it's being accurately valued in the market, which is something for everyone to get a better understanding of. If you don't understand it, join the Discord. We have hundreds of videos at this point that explain what I'm referring to there. There are companies that act in a way detached from earnings totally and completely, which is just lunacy. If you're investing in a business, you need to invest in a business that you know is growing, performing, and will continue to grow, or you are investing in something that is probably a lie. So in looking at Tesla's chart, catering to their earnings, notice how we saw that nice decline down for the buying opportunity. And if we look at that earnings chart, Q1 of 2024 was going to be, in the last 4 earnings, their lowest estimated EPS in the last 4 quarters. Now going forward, Q2 through Q1 of 25, we're expected to see continual growth. If they deliver, beat, and offer significant forward guidance, say bye-bye to 200. I mean, your opportunity is gone. You're trading 3+. So to keep that in mind, as far as, is it the right time? Should those earnings go well? Always a variable. Yes. Should they not go well? Extends the timeline, but I would say answer is still yes, short of something material like losing Elon, because, again, CEO guides the vision of the company. If you lose the captain of the ship may not drive as well, may not go as far, and may not be as attractive to an investor. So always a few things to keep in mind. Let's get into it. We're going to play a little smash or pass. We've got a few tickers that a few people have been waiting for a while to talk about. First and foremost, just drop your ticker in the chat, leave a comment, drop the ticker in there. We'll pull it up on the screen, and we'll dive into it really quick and look at the chart. We're just looking at opportunities to go long, maybe talk a little about the fundamentals, but focus primarily on just getting through as many of these as we can to offer us a kind service to you good people, as always.
Pass, DOCU, pass.
Oh, yeah. I love a little conviction. DocuSign. One will think that because we were once trading at 300, we should be buying at 59. And I'm hearing from you that was a resounding hell no, is what I heard from you.
There's no competitive, no advantage, no moats. the only way it survives private equity acquisition to rip out its parts and try to get any kind of IP from it. Adobe offers
Like an
essentially
Adobe.
Yeah, Adobe offers everything DocuSign does. It's not a coincidence that there's no public stock or no company wants to acquire DocuSign at these multiples. It's super cheap fundamentally, but like it could get cheaper. Like there's no advantage they have like at all. Like it's just a commodity similar to Teladoc. Like Teladoc was a commodity. Telehealth is a commodity. There's no moats. DocuSign's in that category. Yes. I understand like, wow, that growth of 200 is down 90+% or 80%. There's huge room if they can pick up some revenue acceleration. Fine. How are they going to? Who's going to what's the new growth avenue for them? Are they going to go full? I always made the pitch DocuSign should create their own mode within the college campuses and of just something that's own the colleges. That's it. That's a niche that, okay, a lot of companies want to get in that college space. They can utilize acquiring DocuSign in order to get into their foot in the door, but they haven't done that yet. Like they're not really using their corporate strategy of like, all right, we're not as big as we thought we would be. Let's focus on a niche and have a moat within a niche. They're not doing that. They're floundering. Like there's so many better ways to make money in this market that's safer, in my opinion, than DocuSign. Because what's going to stop DocuSign from going from 60 to 40? Nothing. But essentially, you lose 30% of your money for what? Nothing. That's different. That's a scary thing because there's no floor on a stock that has no moat or advantage because it can keep diving and diving. And something that's trading 10 times free cash flow can trade at 5 times free cash flow because there's no difference in the mentality of the investors. Like, fine, like that makes sense. Sure, throw 2, throw 4, like throw any number you want on it because there's no premium that should be assigned at all in a name like DocuSign. I'm sorry for being so like aggressive about it, but like I don't want people to lose their money on like these value tech stocks because it doesn't make sense. Like it's not the good route to go for the longevity of an investor. Like you want to invest in the winners because that's just how you compound your wealth. It's not by falling knife and trying to see some kind of turnaround story that is not there.
Yep. And if you look right here, just something that's interesting and I think will make everyone think this is COVID, right? This is when COVID happened. They were trading around 65, 70 bucks. I would argue they had first mover advantage in 2018 during the IPO. But as you said, no real moat of any kind. Like they're not doing anything proprietary that a million other people can't do. They don't have it. If it was trading at 60 when they had a competitive advantage, right? Now it's trading just a little below 60. They have zero competitive advantage. To think of how you value companies, okay, you're valuing their future potential. What was their future potential then? I would argue it was a lot greater than it is now.
Mm-hmm.
Yet we're trading even lower now, just lightly though. I wouldn't buy this at 60 now because even buying at 60 then, I don't think was worth it. They only moved because of the COVID fear, panic, and hype, and the massive adoption of their platform, right? Which just accelerated to their growth times a billion. But what happened when that slowed down? Can you hear that? That's what happened because they didn't have anything. I use the Adobe suite for my businesses. Why? Because I use Adobe Premiere and I use Adobe everything else. It's convenient. They have me because they have their ecosystem that I am a participant in. A moat.
Yeah.
In a name brand that's like,
you need a vertical suite in this day and age. Like,
yep.
There's AI is going to make so many companies obsolete that the winners will be those tech companies that can offer those platform approach like Adobe does, where it's multiple products in one thing because that's just convenience. Convenience will be the major theme for the next 5 years due to the AI's disruption.
Yep. And my Amex Platinum paid for almost the entire yearly subscription. So DocuSign didn't offer me that. So Meta, interesting one is, as he said, as a data player, they're always here. Weird thing I've noticed lately. I've been looking at some numbers. Their adoption amongst I don't know if they're what's below Gen Z, but like the bottom end of Gen Z and below, I don't know if you saw that recent news where they like the poking features back on Facebook, and they saw usage amongst that population grow by 80% month over month since implementing that.
Whoa. So
Stupid little
if you're saying,
feature.
is there a flywheel on Facebook? Maybe there is, where fashion comes back every 40 years. Could this be like Facebook is
Dude, it's
vintage
vintage
and
now.
coming back for the
It's
alpha? I think it's alpha generation it's called.
vintage.
That's
But
wild.
because the core idea was so straightforward and simple, and then it was used a certain way for 20 years, so it's just there. Again, you don't move a marble statue.
Yeah, and Meta, for example, like it's the high tide raises all boats. Like Meta,
Look at
trade
their
desk,
acquisitions.
PubMax.
I would say just that. Look how they did not shit the bed on a single acquisition.
Yeah.
I would argue that they haven't really leveraged WhatsApp to its capacity, but Instagram acquisition, so simple, brilliant. Even Oculus, very forward thinking, but I get it.
I'm telling you, I know their next winning acquisition is going to be like, it's going to make the stock go to 600 real quick. It's Unity. They're going to gamify.
Ooh.
They're going to gamify
Ooh.
games, AR, VR. Unity as an incredible tech mishandled by management. I think Meta's waiting for Unity to kind of turn ship, get their fundamental profile clean, get all the fat away. 1 or 2 quarters of good results, boom, pounce on it. I think that's what's going to happen. And Meta, with Unity's technology, game over for the AR VR space. They're going to have the product and also be able to monetize it with. It's just there's going to have massive developer base. Like it's going to be a massive company and acquisition. I think that's their next acquisition. Who knows if it's going to go through due to all the noise of like Act 86ing thing, these kind of major companies
metaverse and all that bullshit.
Yeah.
I think what the metaverse, what it will be very different than people originally kind of rendered in their minds. I think it'll be more so a marketplace than it will be like this digital world of excitement. You know, I just think it'll be more of like an interactive, engaging marketplace. Like think of it like Apple Vision did, right? Where you're like, you've got the game on, you're scrolling through an Excel, like I think they're just going to create that environment to turn you into a billboard effectively. I mean, to turn their billboard and I mean, use your eyes as the billboard effectively. I mean, think about it. In every very futuristic dystopian movie, if you guys recall, very personalized ads are popping up off of other people and stuff like that to where they can, I mean, they can do it now with your mobile device. They know who you are. They know what you buy, when you buy it, how much you spend. In reality, there is a world in which those devices can communicate and process fat quick enough if they have the right inventory of ads to then render a result and populate it to you in real time when you pass by somebody. Not insane to think.
It's not insane at all. But also like the metaverse, it's going to be like a metaverse spice in our daily lives. It won't change that much. It's going to be, I don't know, like the way FaceTime transformed interacting with people versus just a phone call. That delta of like, wow, I can see you and I'm seeing you talk, like this video, I can see you talk. That's going to be certain like leap forward that metaverse is going to be. And the next jump from this to like the metaverse, ad tech is going to go bonanza. Like it's going to be an insane opportunity for ad tech names like the PubMatics, Trade Desk, Metas, Google. Like they're going to be not just those names. You guys need to factor in the e-commerce names. Mercado Libre has an insane e-commerce platform. They're just starting the ad revenue business, and it's going to be 75% gross margins, and they already have the infrastructure and like all the users already. Just use come on over and do the ads, and they're going to be printing cash, similar fashion that Amazon's going to be doing it. See Limited, they might be a profitable machine once they get their ad rev business coming through. It's like ad tech and ads are going to be just incrementally getting more and more popular and more necessity as the years come on. And once metaverse gets that scale, that's the inflection point for ad tech, and they're going to go bonkers on the revenue upstream and then earnings juice that they're going to get just from that.
One thing I got to bring up because it has hold on, this is like this blew my mind. I first saw it on TikTok. And I don't know the validity to it, but I think it is worth taking a look at. supposedly the Amazon just walkout stores, dude, was just a
Oh
room
yeah, I
of
saw that. I
1,000
can't believe that.
Indian guys. It's the
Crazy.
Indian guy system.
That's so nuts. I can't believe that.
Unbelievable. It never. I used at one time when I was at a concert and I was in there and I was like, dude, this just doesn't make sense. Like, it just doesn't make sense. I figured, okay, maybe they ping my device ID because I'm an Amazon subscriber, and then they can ping the item itself. But how would they know what the item is? And I'm not scanning a barcode, so it just didn't make sense. Nothing added up about this. And then when I saw this, I just went, yep, like that makes sense.
Yeah, it made me think that a lot of Indians just saw me picking my nose and picking my wedgies because they're watching me the whole time in those stores.
Oh man, dude. God, that's beautiful. All right, let's knock out a few more of these. I just had to bring that up because I thought that was just hysterical personally, and I could not stop thinking about it.
Never heard of Rhythm.
Yeah, I haven't either, so we're skipping. There's no chart.
Oh, okay. DigitalOcean. I got to talk about DigitalOcean. This is one of my babies. I think this name is going to surprise so many people this year. Why? First off, you guys don't know DigitalOcean. It's a only pure cloud computing company in the market right now. So what's cloud computing? Everyone knows what AWS is. That's essentially what DigitalOcean is, but for SMBs. So which segment of the economy is going through the hardest recession right now? SMBs. DigitalOcean that's their bread and butter. So obviously they're struggling. But if AI is the inflection point that we've seen already in the hardware space and the infrastructure place, SMBs will follow suit. They have to. That's just the way the economy works. Of like, that's the path they have to go to maintain competitive edge or whatnot for consumers. Anyway, so past 2 weeks we saw the infrastructure main players that Microsoft Azure, Google Cloud, Amazon AWS, they've shown reacceleration on the infrastructure side.
Huh.
You don't think it's going to happen for DigitalOcean? It's going to happen. I just don't know how bad that recession is for SMBs. That might be a headwind for them, but it's still going to be inevitable. It's like high tide raises all boats. That's what DigitalOcean is. They're riding on coattails of these big players. And guess what? They made a massive acquisition on Paperspace. So they have GPUs. They don't have to go through NVIDIA for that. They have the GPUs. And these companies who want to save money on GPUs, they don't have to go through NVIDIA and stuff. They'll go through DigitalOcean. And that was the most underrated acquisition 2 years ago. They went through a lot of macro-driven headwinds like the recession. Their previous CEO, he legit said, I think AI is a fad, and I don't think it's going to stick. He got ousted 3 months after saying that. So they went through a transition in the management. Like, okay, they got a real big leader right now as a new CEO. It's the second quarter presenting their earnings this Friday. And I'm telling you, it's going to blow people's minds what they're going to produce. Because right now, I think the anticipation is fundamentally they're pretty sound because the previous CEO, who was an anti-AI person, he just didn't really believe in AI. He got axed, fine, but he cleaned
Not even real.
Like, he cleaned the company out there. Like, he made them a free cash flow machine. They're producing 20% free cash flow margins, and they're supposed to grow in the low teens. But after seeing the reacceleration from the infrastructure side for the big tech players, if they grow closer to 20% this year, this is going to be a $70 to $80 stock. I'm not saying it's going to happen the 20% this year, but going forward, with the anticipation of everything that AI is transforming on the infrastructure side,
yeah,
they could be growing. They could have a 15 to 20% CAGR for the next 4 to 5 years with their margins being at 20%. They qualify for the Rule of 40 score, which is my favorite metrics. And because of that, valuation is so undervalued right now. I have a $75 price target in this stock for 2026. I think it's going to be a major winner. And this Friday, we're going to see their earnings reports. I have no idea why they're doing a pre-market on a Friday. That's so bizarre. I don't love that.
Why would anyone do that?
But anyway, I still think this is a name that's going to be a mini monster. It's only worth $4 billion, the market cap. Come on, like cloud computing for SMBs. You know, the runway is like insane.
Look at this, dude. Holy shit. Yeah, it looks like I have not been paying attention. It should have been. This is something else.
I have a 3% position. I'm just waiting for that sign that SMB recession's over. Business spending is getting picked back up. And we see that paper space or that GPU specific part of their business seeing a pickup. Once I see that, which you guys will all know about on our Monday and Friday sessions that Austin and I have, I'm adding like a madman. I'm putting this up with the Tesla and Snowflakes of my DCA. Like those three names, boom, 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 every week.
And they're going to be in the small cap 6, but
Yeah.
200% plus upside surprises the last 2 earnings. Dude, we might have to put together an options trade for this. So look, estimated revised EPS went up significantly, arguably double for Q1 of 24. So keep in mind with earnings, beating earnings, great. Crushing earnings, phenomenal. But here's the thing. If expectations went up and we crush earnings, that is like, to me, that's vertical upside.
And the price hasn't reflected that. That's the delta of opportunity for the near term. But again, my thesis is much bigger. We're like, this is going to go from a small cap to mid cap way quicker. Like I found Celsius in the teens. This and Transmedics and Global E, those are the 3 names where like, that's my next Celsius. Like these are the names that are going to be like compounding so freaking fast. And we saw with Transmedics, like Austin and I a month ago is like, I got into Transmedics in the 30s. We talked about you should get in at 70s just a month ago. It closed at 135 today.
Yep.
There has not been a red day since
Double
their earnings gap up.
And this one's even more interesting because this one I charted a very long time ago. I remember the stream I did it. We talked about the 1, 2, 3, 4 walk down before the springboard. There's your 2, 3, and 4. There's your bottom at 20. Now you're at your springboard opportunity. So
I'm telling you, I wouldn't be surprised if it hits $50 by summer. Like it's going to go real quick.
Yeah, these earnings are going to be when do they post?
Friday morning.
Yeah. So that means we need Porter. We have to revisit this one. There's some earnings option swing potential that we're going to explore. This one will be interesting. All right, let's knock out a few more of these. Go back. Who else has got one? Got one. My man Kahinde, we're going to do Disney for you just because that is one I'm currently trading in our short-term playbook. We already got our touch of 119, so just shy to fill you in. So this was more of just like a practical trader's trade. Break a 90, signals buy, trade to 119, $30 upside. To me, that was an easy peasy move. If you look in the past, we've ripped through this range after significant consolidation, and we've done it like 3, 4, 5 times. So this was a no-brainer in my opinion. With earnings coming up, it does open the door to some variables that you don't really want to explore. But I would say that over 119, like 130 is definitely on the table. But I would say, again, I wouldn't smash it now because our entries were below $90. So, again, trading with that padding is essential, especially for names like Disney that could have seen significant downside in terms of their earning potential. But I will say that there is greater than expected earnings growth. It's not a name like I love permanently in terms of long-term outlook. This is where the best opportunity is. It's just one that really made sense. And should they beat earnings, our trade here was core equity position through Q4 of 24. Short-term would be Q2 of 24 to just trade that upside, dump it, and keep a small position on the potential of what could happen through the end of the year. But again, with a tight stop in place on the chance that we don't get those results, so we could just dump it with a nice 30% return. What are your thoughts?
I like as a short-term trade. Coming from someone who's worked in the entertainment space in the corporate strategy, like they have so many long-term headwinds that I don't know how they're going to solve it. Like they're never going to be valued what they deserve. And you see that with Paramount specifically example, like their IP is worth so much more than what the market cap's showing just because it's not a good business model. It's not an economic good business model. Streaming, movies, like it's just so tricky and such a headache of a stock to own for a long-term investor that I think they're near-term, like what Oz is saying about like short-term, like be a big pickup. Yeah, because guess what? ESPN NFL deal, that's going to shoot up the stock. That can happen tomorrow. Then now there's been rumors about it for weeks. Yep. That could be the catalyst to break out, and like you can test like the 130s, 140s. Like again, you trade this name, don't own it.
Yep, agreed. And I do believe Ethan will be day trading this live for earnings tomorrow morning. So make sure you check that out on Twitter and YouTube. Let's pick a couple more good ones. I know this one you're going to like. I accidentally put it up on the screen. I'm sure you got a little excited.
DDOG.
Yeah,
So,
can't shy
right.
away from it.
So I've been preaching this for weeks, and obviously Piper, the sell side or the hedge fund, was listening because they sent out a note Monday morning. Infrastructure players, Amazon, Google, Microsoft showed reacceleration. That should be trickling down to the consumption software names, the Datadogs, the Confluence, Snowflakes, MongoDBs. Okay, I've been saying that for weeks. It's obvious. However, for Datadog, they're clearly showing the most amount of strength among all four names as called out. Why is that? Observability might be the easiest. It's the most durable potentially of the consumption-based model. That could be the reason. Also, like they sandbagged their earnings, like guide last before. They're supposed to grow low 20%. If we get any kind of like reacceleration to 25 to 26, this is going to break out to 150. Minimum.
Yeah, I would say 150 is really going to be the point of contention. I'm going to get rid of that last one, but that's their full fib retracement, which is just, for those of you that are technical traders, it's just a very important number to understand.
So their earnings is tomorrow morning. So this could be, I guess you guys won't have the opportunity to trade, but it's good to keep on your watch list. Definitely. Of any kind of gap ups on their earnings. But again, I think this is clearly, we saw from the infrastructure players, like they're seeing a reacceleration. So like Datadog, something must be wrong if they don't beat. But the question, I think at this point, like they've held up the most of all the names. I don't think a beat will do it for them. I think they need to do a beat and guide up. And again, we just saw Palantir. They beat. They didn't guide up really. They're down 5-6%. I could see Datadog doing the same thing. I don't think they'll ever break $100 again. Again, they bounce and they're stabilized and consolidating after their last earnings report. I think this, again, same story where if it beats and guides up, it'll hit 150. If it beats and that's it might go down 5% and consolidate in the 120s for another couple months.
Right. So next up, couldn't agree more. So basically what he's saying is it's a smash, but it's a more of an on the radar, be very present with earnings because the opportunity's there, but right now it might not be the best. Next up, we got Rio Tinto. No idea what they do, but I will say this chart is a delight. I don't know if you've ever heard of this company before.
It's a commodity. It's a commodity play. I want to say it's an iron, but like I don't know much about iron. Commodities are tricky. Like I lump them in the same bucket. Like if iron's moving the price, I think all stocks within that are exposed as an iron producer will move. So essentially, like you're using it as a vehicle to capture the alpha of the iron price, a commodity price. Like there's only so much we can talk about, and we can't talk about the long-term mode or competitive advantage.
No, but dude, chart in and of itself, get some.
But that's the case for all commodities, though. Commodities have been on a tear in 2024 across the board. So knowing that there could be a pullback in commodities in the near term, and this name might be falling victim to it. But again, like look at that strength and accumulation. Like that volume, you can't lie about that volume.
You can't. And I would say, if anything, and this came from Takak, who knows what they're doing. So I would say that this position trade, you're willing to give back 9, right? So if you're buying right now 69, your stop is 59. You're giving 9 away to take double. So I would say risk reward here makes a ton of sense. If you look what we happened in the past, this is 2007, so it was a while ago, but we have a lot of strength every time we push off a support here. So I would say that that's really your indication, and I would say upside maybe limited to $90. You got a nice little 20-30% kind of trade there. Easy 50% potential that I think it would be worth taking as position trade, meaning you buy it all now, you set your stop below here. I would say maybe even take a little more risk, go below the 200-day, and it's either you're going to double your money or you're going to lose 20%. Either way, you're trading at 5 to 1. For every $1 you risk, you put 5 in the bank. Those are worth taking, in my opinion. But again, commodities super boring. Don't know anything about it, so take it for what it's worth. Rocketlabs.
Oh, who said Rocket? That's That's one of my favorite plays in a small
The
cap.
Mamba. The Mamba brought it up.
All right. So first off, look at the revenue jump that they're expecting. Like they missed by 1 or 2 million, I think, this earnings season, this earning quarter. Like, come on, that's a nothing burger. They just went from an 50 million quarter to now they're jumping to 90 plus. And that kind of jump in revenue, you'll see that in the space industry. Like you're seeing companies like go under. There's a massive consolidation happening in the space industry, and I'm freaking bullish in the space economy. That's the next frontier after AI and quantum computing is space. And there's only 2 names to play that.
I have a friend that's they're IPOing soon. They basically have already nailed down the both delivery system and consumer travel element, and they're already basically working out contracts both between like space stations, different organizations to like fuel their growth with both the commercial contracts of transporting things to and from, and then the B2C side of taking. I don't know why the hell you'd want to go to space personally, but to each their own. If you're rich enough, you're eventually bored enough, you'll go to space. That seems to be the theme here. Personally, you won't catch me dead there. Why? Because you're probably going to die there. It's a cold, black nothingness that I don't want to experience ever in my life, unless this planet is dead. Even then, just kind of, I'll ride it out with the ship. That's my commitment to the earth.
well, for Rocketlab, it's more of a B2B than B2C. But for B2B fronts, I don't think they have as much fear because I don't think humans are on there. It's more about satellite launches and like launching things up there. But regardless, for Rocketlab, there's only 2 names you can play this, and it's the only public name. SpaceX is the other. You can't access that unless it's private rounds. Rocketlab,
which are going on. So if you have 250K liquid and you want in, give me a call. I've been getting solicited on that one left and right.
I have too, but their offers are not good.
No, they're
offering
pretty terrible. You needed to be in 2-3 rounds ago to even make it make sense.
But for Rocketlab, like again, they're worth 1.8 bill. I think they just showed in their earnings report today after the market, like their backlogs at $1 billion. So you're just saying like they're essentially worth only twice as much as their backlog. Come on. And they're about to be profitable in a year, and they're growing the top line 40 to 50% CAGR for the next 3 years. And they have a first mover advantage. They're in a specific sector that there's a massive consolidation from losers from the SPAC days. They're going to buy these companies' assets for 20 cents on the dollar. And they have partnerships with New Zealand governments as partners within Rocketlabs. So now they have an actual government invested in them, and they want them to succeed. And guess what Rocketlabs doing? They're utilizing that foreign land in New Zealand to do these launches, and they're not in this box domestically and to use NASA. And that's essentially what SpaceX has to do. They have to stay in domestically, but like Rocketlab doesn't have to do that. They have the luxury of New Zealand, and they have a CEO founder. If you guys haven't, I interviewed with him actually 3 months ago. If you guys haven't looked him up, like he's one of those like Tesla, Elon guys, where like on the ground floor building this company, engineer, like he knows everything about space. Rocketlab, their headwind on the stock price is purely interest rates are going to be higher for longer. They're not profitable yet. They're just experiencing the issues of being super early in an early innings of the economy that hasn't really began yet. Exactly. It's right now they're in batting practice in the baseball game. They're not even starting the game yet for the space economy. And because of that, treat Rocketlab as like your VC and you're investing in a private fund.
That's exactly what I was going to say. This is something that, you got an extra 100 you can throw in just for shits and giggles. I mean, to be honest, this is the time to do it. It's a lose it all or make a killing. I mean, that's really the main important point here. So we mapped out these projections, right? Just based on simple price action and buyer psychology. I would say that should they become profitable, everything is favorable. You got 275% upside on the low end. You got 750%, 759% upside on the high end. That's explosive growth, right?
Well, first off, I forgot to tell you the U.S. government invested in them. Look at that chart, what it looks like, what we just talked about earlier in the call. Palantir in the 8s, boom, on the IPO, went down to the 8s. Rocketlab is doing the same action, the 4s. They're laying these massive deals with multiple governments. Guess what's going to happen next once they have that inflection point of profitability? It's the same shit, different day. We're showing it to you live. It's the same thing that Palantir happened in the 8s years ago. Everyone wants Palantir in the 20s. Everyone's going to want Rocketlabs in the mid-teens and 20s. It's the same thing. History mimics itself in this game. And we're seeing it right now with Rocketlabs. Like, it's going to happen. I'm seeing the price action. The chart cannot be any similar to Palantir in the 8s. And they both have revolutionary products and tech and a secular growth theme like AI, which everyone thought AI was as futuristic as space economy. Guess what? No, it's a reality. Space economy would be a lot sooner than most people realize.
Yeah, we do have a double bottom on that chart. We did create a new low, but it's immaterial. No, 347. So this is double bottom. I'm not gonna lie, you have officially sold me on this. I will be throwing a couple $100
very similar to Palantir in the 8s.
I sold myself on it too.
I own 2,500 shares. I'm done buying this year, but I will be adding next year. That's just how my risk tolerance works. Like, I doubled up my position this year, and I already fulfilled everything under 4. I'm gonna wait till next year. If it breaks 3, I will add more, but I think it's that consolidation phase until they have that inflection quarter. And once you see that, like Austin said it, like this thing could go from 4 to 30 so fast. That's a 10x. It's an absolute 10x. And this is a company that's a real company. They make money. They have government deals. This won't go to 0. It's not going to go 0. It might consolidate. But again, you need to kind of have the balls or risk the biscuit in order to make that leap, like the Palantir in the 8s. We're seeing that right now in Rocketlabs and 4s. And again, I can't pound table even more. Like, as a growth investor, I've been doing this for a while. Like, I love adding when there's blood in the water and nobody loves it. That's where I find the CrowdStrikes, Transmatics, Palantirs. The list goes on. Rocketlabs is a high risk spec, but I see the same vision as the other names I just called out. It's everything aligns with it, and it might take time, but again, great time to add.
But again, this is my like trading accounts. This is where I buy the smaller positions, trade them, keep a little bit, but trade the core. Like, this is what you'd be looking at. And again, following this ideology that we're discussing with you. Cassava Sciences, when I talked about this a couple years ago, before it went from 2 to 137, they were the only player in the Alzheimer's market that was able to push through phase 3. Take it or leave it, still trading in the 20s from ads at 2. I think my total average on that is like $7 all in. But the point is that one trade netted me with not even a huge position, like 60K. Guys, like, they're not all gems, but there are gems. And again, to take what Shay said and elaborate, take the PE VC model where they're throwing darts, guys. They make 100 investments knowing that 1 or 2 is going to pay them 10x on their money while they lose every dollar and everything else, and also write off the losses. So Palantir was one of them. Tesla was one of them. This is the one account. So I have about 200 something shares total. The rest of my retirement, the SEP IRA. Disney shares, Cassava, that I already mentioned that. Robinhood, obviously the Netflix trade, we were buying that at $150, 200. Google added small position here just for the trade, 30 to 50% upside. This is what it looks like when you make that bet when everyone else is terrified.
Mm-hmm.
So again, if you can stand with conviction on the understanding that this could go or this could shit the bed, but I have 5 that I'm truly confident in, and that one could pay the bill for everything else. Take it for what it's worth. Again, you have to define your own risk tolerance. You have to define your own roadmap. You have to do this for yourself, by yourself, but you don't have to do it alone. And that's the reality here. So take that to the bank, cash it in. It's 2 hours a week. You show up here every week. If you're not profitable in a year, I'll send you a couple $100. That's my word. Honest to God, if you can show me you followed all this and you're wrong, I'll send you a couple $100 in the mail, because there's no way. There's no way. Find people that you can trust that are doing the research. Take it to heart. Learn and understand as much as you can. Don't just follow blindly. And above all else, take it seriously, because this is your future. If you're our age or even older or younger, doesn't matter. Inflation will destroy you and rob you of everything that you think you have or will have.
Cash is dead. Cash is dead.
Is 3 times as expensive as it was 2 years ago. Why? Doesn't make any. It's not reflective of the price of goods. It's nature of the game, man. So don't get killed by inflation. It's murder, and you'll get killed. Don't get killed by it. So this was a blast. See you Friday. Any final thoughts?
It's gonna be a wild week for growth. So watch out for some names, gap downs, because there's like over 10 to 15 names reporting. So like have that dry powder
Hallelujah.
ready.
Hallelujah. Have it ready. Love you guys. Stay blessed now. Bye-bye.